Hey everybody, Smart Silver Stacker here. Hope you're doing well. The two largest foreign holders of U.S. Treasuries are dumping U.S. debt to the tune of more than $100 billion in the past quarter alone. I mean, China and Japan are dumping U.S. debt now like it's radioactive waste. And at the same time, China is quietly hoarding silver by the thousands of tons. So what is going on here? Could this be a signal of looming trouble for the US dollar and a massive opportunity for precious metals like silver and gold? Well, stay tuned because the implications of these moves are enormous. Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. Okay, so let's delve right into this massive debt sell-off and the implications thereof. In Q3 of 2024, Japan just sold a record $61.9 billion worth of U.S. Treasuries, and China, over the same time period, dumped $51.3 billion worth. That is the second largest debt sell-off from China in a quarterly period. Now, at the same time, we've got long-term U.S. interest rates rising, despite the fact that the Federal Reserve began cutting the federal funds rate recently in September. And these rising rates are now pushing the cost of servicing the exploding U.S. national debt past $1 trillion annually. And this is an unsustainable situation. Now, let's discuss the motivation behind this debt sell-off from China and Japan. In Japan's case, likely they are unloading their U.S. Treasuries because of their own ailing domestic economy. The yen has been devalued. They need to stop further devaluation. So what do? They sell their U.S. debt, they buy yen, they prop up its value, and they try to prevent further domestic inflation. Now, in China's case, the motivation is perhaps a little more nuanced. First of all, there is the fear of rising U.S. inflation and higher rates, which will erode the existing value of these treasuries. So this is really a concern for any entity, individual or corporation, who is holding large amounts of U.S. treasuries. But in China's case, there is also the additional geopolitical risks. I mean, China doesn't want to end up like Russia, whose hundreds of billions of dollars worth of dollar-denominated reserves were frozen following the 2022 Ukraine invasion. Now, let's talk about why rising rates are such a problem here. Why are these long-term rates rising in the first place? Well, again, first of all, it's higher inflation expectations. Anyone who is buying U.S. debt, who anticipates that the dollar will be further debased in the future, they are going to demand higher rates, higher yield on that dollar-denominated debt to compensate them for that debasement of the currency. And simultaneously, we have exploding U.S. deficits. That is also putting upward pressure on interest rates. The deficit just hit $257 billion in October alone. And at the same time, as the U.S. Treasury itself is putting this huge amount of debt out onto the market, the biggest foreign holders of U.S. debt, that's China and Japan, are dumping treasuries, as we mentioned, and that is also pushing bond prices lower and yields higher. Now, the consequences of this are that rising rates mean that older existing bonds with a lower yield lose value. And that creates a vicious cycle in which even more selling is incentivized by the fear of future losses on existing treasury holdings. And at this point, long-term rates are outpacing Fed control. The Fed has begun cutting the federal funds rate, and yet look at what is happening to long-term interest rates. Just look at the 10-year yield. I mean, they began cutting the federal funds rate back in September, and yet the 10-year yield has been steadily rising ever since. This could potentially signal a loss of confidence in U.S. financial stability. Now, I think the important question to ask here is what happens next? How do we prevent skyrocketing interest rates from creating a runaway debt crisis? Well, from my point of view, it seems that the Federal Reserve will likely be forced to intervene to stop yields from rising before that happens. Now, as we've mentioned, the way that bond yields are driven higher is by increased selling, whether that be from China, Japan, the US Treasury, whoever. The more bonds that get sold onto the market, the higher the rates go. So the inverse of that is, in order to drive yields lower, somebody needs to get into the market and buy those bonds. Now, the Federal Reserve can do that by returning to a policy that is known as quantitative easing. This involves the Federal Reserve creating new money out of thin air to purchase the debt, which will drive yields lower. But at the same time, unfortunately, this effectively debases the world reserve currency, the US dollar. And the implications for the dollar here are pretty significant, and they could have a huge impact on the precious metals and the global economy. If the Fed is forced to create trillions of dollars out of nowhere and pump those into the economy by lending them to the US government with really no hope of ever being paid back, expanding their balance sheet even further than it already is. I mean, it's already close to $7 trillion. And yeah, they've been trying to draw it down recently, but they've still got a long way to go to undo QE that's been done in the past. And already we're facing this crisis of rising rates. And a weaker dollar, it means that inflation will spike even further. It will mean reduced purchasing power domestically, and also an erosion of trust globally in the reserve currency. And that is why it should come as no surprise that while China is dumping their US Treasury holdings, something that they are accumulating large amounts of is physical silver bullion and gold as well. There's also a lot of gold accumulation going on worldwide and in China. But check out this headline from the Jerusalem Post, which tells us that China is now importing 9,000 metric tons of silver annually, and that is approaching now India's consumption level, another major importer and consumer of precious metals. Now, to give you an idea of why China's appetite for silver is so voracious here, a single industrial park in Zhejiang consumes 2,000 tons of silver annually for high-tech manufacturing. And, this is more than just China buying a metal that they need for industry. This is really a strategic move on the part of China. We've got President Xi, who has reached out to Peru and is now buying their raw silver production directly. It's not even going onto the market. It is being sold directly from Peru to China. And, that signals to me that this is also part of a geopolitical strategy to secure industrial dominance. Silver, as a very unique material, it's got the most conductivity of electricity and of heat. It's highly reflective. It's very ductile. It has a lot of unique properties, and it's critical for the manufacture of solar panels, electronics, and other cutting-edge technologies. Even new uses for it are coming out all the time, and it's going to be a key to the global energy transition. We've got Samsung that recently announced their solid-state batteries that utilize silver nanoparticles to extend the life, decrease the charging time, increase the capacity, reduce the weight, and all these amazing things. It's all made possible by silver. And that is why China wants to lock down their supply of silver so that they have what they need for the future. In fact, silver is so key to current developments in AI and electrification and all these high-tech applications that I think silver is going to become the critical resource of the 21st century in much the same way that oil became the critical resource of the 20th century. And we've got these big supply deficits right now. The world isn't producing enough silver to keep up with all of the increased consumption, and the only cure for that is going to be much higher prices. But it isn't just silver that China is accumulating. They are accumulating gold as well. And it's been several months since the People's Bank of China officially increased their gold reserves. But before that, they were on a huge rip of buying for, I think, 18 months in a row. But there is rampant speculation that China is quietly accumulating gold behind the scenes. And at the same time, you've got the other BRICS nations, and especially Russia, also stockpiling gold. Their reserves just recently exceeded $200 billion in value for the first time in history. And the Russian State Fund told us just a little over a month ago that they are going to begin buying silver for the first time in history. So this rush to accumulate strategic assets, hard assets, physical precious metals is not relegated to China alone, and it is likely to accelerate moving forward. And here's the key takeaway from these events. China and Japan, they're dumping their US treasuries, and that's a signal of waning confidence in the dollar. Meanwhile, China's silver and gold buying spree points to a clear strategy: hedge against the dollar and dominate critical future industries. Now, for us as stackers, this means two things. First, the dollar's future, it's looking kind of shaky. Second, precious metals like silver and gold are becoming the ultimate insurance policy in an unstable world. And if you're not stacking now, might be a good time to start. It's not financial advice. I'm not telling you what to do, but just my opinion. But what do you think? Will China and Japan continue dumping their US Treasury holdings? Will they continue to load up on precious metals? Drop a comment below, and don't forget to like and subscribe for more insights on geopolitics and precious metals. If you want to see more videos on these topics, check out the ones popping up on your screen now. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker out.